Alright, let's talk money, big, global, corporate money, the kind that moves markets, shapes industries, and impacts millions of people around the world. Today we're diving into a story that's making waves in the financial world. There's a company called Prosus, and it's not just another name in the business world. If you haven't heard of it, you should pay attention, because Prosus is quietly becoming a powerhouse in global tech investing. On November 17, 2025, Prosus made a major announcement that caught the attention of investors and analysts everywhere. They expect their earnings to surge in the first half of fiscal 2026, an impressive forecast that's turning heads. This isn't a minor bump, it's a significant leap forward, suggesting something big is happening behind the scenes. It's a signal that Prosus is performing exceptionally well. Why should you care? Because these moves can influence the entire tech sector. Understanding how companies like Prosus make money helps you understand the economy and your own investments. It's about seeing the bigger picture. Prosus is a global technology investor with stakes in some of the world's fastest-growing digital companies. They put money into innovative tech companies, nurture them, and watch them grow into industry leaders. Their latest announcement shows their strategy is working. They promised profitable growth, and now they're delivering. This isn't luck, it's a calculated result. It's the result of smart decisions, strategic investments, and a deep understanding of the tech landscape. When a company of this size projects strong results, it sends a ripple effect through the market. It's a positive sign for the tech sector and the broader market, hinting at more opportunities and growth ahead. We'll break down the numbers, look at what's driving this growth, and explain why it matters. We'll explore the reasons behind the surge, the strategies that set Prosus apart, and the impact on investors like you. And most importantly, we'll discuss what it all means for your financial future and decision-making. Think of this as your crash course in corporate finance. Clear, simple, and straight to the point. No jargon, just the essentials. Let's dive in and see what's really happening with Prosus. Let's get to the numbers. The latest financial results from Prosus are turning heads across the investment world, and for good reason. Prosus expects earnings per share from continuing operations to jump between 28.1% and 37%. That's a significant leap, especially in today's competitive market. Imagine getting a 37% raise overnight. That's how big this is for investors. It's the kind of growth that can reshape portfolios and boost confidence in the company's future. Core headline earnings per share, which strips out currency swings and other noise, is set to rise 20.1% to 28.5%. This metric gives a clearer picture of the company's underlying performance. This shows the core business is strong and growing fast. It's not just a one-off spike, but a sign of consistent progress. Headline earnings per share, which adjusts for one-time events, is also up by 6.5% to 15.9%. Even after accounting for unusual items, the growth story holds up. No matter how you measure it, the trend is up. Every key metric is pointing in the right direction, signaling momentum. These are not vague promises, they're specific projections based on real performance. The numbers are backed by solid data and careful analysis. Including all operations, basic earnings per share could grow as much as 39.9%. That's nearly a 40% jump, reflecting the company's broad-based success. Prosus is being transparent, showing exactly how well they're doing. This level of openness builds trust with investors and the market. This multi-metric success excites both Wall Street and everyday investors. It's rare to see such across-the-board improvement. It's proof of a robust, diversified strategy. Prosus is showing that its approach can deliver results in multiple areas. Prosus is on a roll, and these numbers make it clear. They're not slowing down anytime soon. Where's all this profit coming from? One word: Tencent. Tencent is a Chinese tech giant. Think WeChat, gaming, and more. Years ago, Prosus bought a big stake in Tencent, and that investment has exploded in value. When Tencent thrives, so does Prosus. In the first half of fiscal 2026, Tencent's strong performance boosted Prosus's earnings. This is called an equity-accounted investment. Prosus gets a share of Tencent's profits. It's like owning a rental property that pays out billions. Prosus's early, patient bet on Tencent is paying off massively. The recent earnings surge is directly tied to Tencent's ongoing success. Picking the right partners and holding on for the long term can be game-changing. Managing such a large stake takes skill, but Tencent remains the main driver of this earnings beat. It's a lesson in diversification and vision. Prosus's Tencent investment is still its golden ticket. There's another factor behind Prosus's earnings jump: share buybacks. A share repurchase is when a company buys its own stock, making each remaining share more valuable. Prosus has been selling small portions of its Tencent stake to fund these buybacks. They unlock value from Tencent and return it to their own shareholders. The gain from selling Tencent shares is a big reason for the earnings spike, up to 37%. But Prosus is transparent. This one-time gain is excluded from headline and core earnings, which show ongoing performance. The buyback strategy helps close the gap between Prosus's stock price and the value of its Tencent stake. Management is actively working to maximize shareholder returns. This is smart, hands-on financial management. The buyback program played a direct role in the blockbuster results. Tencent is huge for Prosus, but it's not the whole story. Prosus's own businesses are now major profit drivers. They've built a global portfolio of e-commerce companies: food delivery, classifieds, payments, and edtech. These aren't side projects. They're substantial, growing, and finally profitable. For years, these businesses focused on growth, not profit. Now, that's changed. Prosus's e-commerce operations are delivering real earnings. This shift is a game changer, making Prosus more than just a Tencent holding company. Diversification makes the company stronger and more resilient. Profitable e-commerce proves their investment strategy works. It reduces reliance on Tencent and creates new growth engines. Prosus is now a mature, well-managed investment group. Let's dig deeper into Prosus's e-commerce success. Consolidated businesses are those where Prosus has a controlling stake. Their results are fully included in Prosus's numbers. For years, these segments grew revenue but lost money. Investors wanted to see profits, and now they're here. Prosus shifted from growth at all costs to profitable growth. They improved efficiency, focused on strong markets, and optimized operations. Food delivery and fintech divisions have become more efficient and profitable. The entire e-commerce portfolio is now profitable, a landmark achievement. This validates years of investment and gives Prosus more financial firepower. Profits can be reinvested or used for new ventures, fueling a cycle of growth. Prosus is no longer just a Tencent proxy. It's a proven global operator. Investors now see two engines: Tencent and a profitable e-commerce portfolio. That's stability and growth in one package. So, who is Prosus? It's a global consumer internet group and one of the world's largest tech investors, headquartered in the Netherlands. Prosus was spun out of South Africa's Naspers in 2019 to house international internet assets, including Tencent, and attract global investors. Prosus invests in nearly 100 companies, building an ecosystem where businesses complement each other. Their portfolio spans Asia, Europe, and the Americas, focusing on high-growth, tech-driven sectors. Their companies serve about 2 billion consumers worldwide. Prosus is a long-term investor, taking big stakes and acting as a strategic partner. They build an interconnected network of businesses, shaping the future of the consumer internet. Their latest results show this strategy is working, big time. You can't understand Prosus without knowing about Naspers, its parent company. Naspers, a South African giant, made a legendary investment in Tencent back in 2001. As Tencent's value soared, Naspers became too big for its home market. In 2019, Naspers created Prosus, moved its international assets there, and listed it in Amsterdam. Naspers still owns most of Prosus, but now global investors can buy in directly. Prosus's financials are closely tied to Naspers. When Prosus's earnings jump, so do Naspers's. This structure lets both companies manage their scale and appeal to different investors. Prosus is the operational arm for international investments. Naspers is the parent and major shareholder. Understanding this relationship is key to seeing Prosus's place in the global market. Let's wrap up and take a step back to see the big picture. Prosus has proven it's not a one-trick pony. It's a financial powerhouse with multiple growth engines, each contributing to its impressive performance. The shift to profitable e-commerce is a huge de-risking event for investors, showing that Prosus can adapt and thrive in changing markets. Prosus has demonstrated it can build and operate successful businesses, not just hold a winning lottery ticket in Tencent. It's about creating value, not just inheriting it. Ongoing share buybacks show management's commitment to shareholder value, signaling confidence in the company's future and a willingness to reward loyal investors. The combination of a stable Tencent investment and a profitable e-commerce division makes Prosus a compelling long-term bet, blending security with growth potential. Even if you're not an investor, this is a lesson in vision, execution, and smart management, qualities that set great companies apart from the rest. It's about patience, quality, and strategic thinking, all working together to build something lasting and meaningful. Prosus's expected earnings jump is the result of years of planning, disciplined execution, and a relentless focus on long-term goals. They're harvesting rewards from Tencent, while simultaneously building new internet businesses that could become the next big thing. This is a global powerhouse hitting its stride, expanding its influence and impact across continents and industries. It's a sign of a healthy, innovative, and well-managed company, one that's always looking ahead and never standing still. And knowing what makes a company like this successful? That's priceless, because it teaches us what's possible when vision meets execution, and ambition is matched by discipline.